Dear fans of losing money, a crypto celebrity that was previously highly celebrated lost a fortune of $100 million. I'm talking about Ralph Neuner. Neuner was previously celebrated for his success. However, now he lost $100 million with his investment in Terra Luna. He completely overcommitted and followed blindly his greed, and this led to a total catastrophe, as he lost $100 million. Also, he completely disregarded the principle of diversification, and all in all, he also had a toll on his mental health. But what can we learn from this? Well, of course, the first thing we learn is that diversification is very important, especially for volatile assets like crypto. Now, while a lot of cryptocurrencies become more regulated, there is still a high risk, and it's very important to diversify among cryptocurrencies. And this can even be a problem for cryptocurrency investors that are completely new, as they just pick one cryptocurrency and think that this cryptocurrency will rise forever. However, you should always diversify. Next thing is that you should not fall for the greed. And this is very important and easier said than done. It even happened to an expert like Neuner. However, it's very important that you look at the facts and not the potential, as the facts will drive the price of the cryptocurrency in the long term and not the feeling. And while the fear and greed might play a role, this will only last for a short term. The next thing you should be aware of is the criticism. You should not ignore the criticism. Neuner did ignore it, and he mentioned that while there were some red flags along the way, he completely ignored them as he was emotionally attached to the cryptocurrency. And this is a very big mistake that especially a lot of newcomers fall into, as it's very important, again, to look for facts. That's the facts will drive the future and not the feelings. And if there are some red flags, they should not be ignored. And you should always ask yourself, is the criticism valid or not? In general, we can also have a couple of steps that are very useful and we should always keep in mind when investing in cryptocurrencies. First is the lack of basic crypto knowledge. This is a pretty big problem for beginners, as they sometimes don't even know much about the market or how things work. This is a very basic and general mistake, and it should be avoided. Also, another problem that especially newcomers make is short-term thinking. This is a big problem, as of course it's possible in theory to make money with short-term trading. However, this is more for advanced traders, as you really need a better understanding for the market. So I would say it's better to, when you're getting started of course, to go for simple strategies and to think rather long-term than short-term. And this leads me to my next point, overcomplicated strategies. A lot of crypto newcomers, they think that they have to do some overcomplicated strategies to make a substantial amount of money. However, this is not necessary. It's better to follow simple strategies. And it's also important to not follow strategies that you just saw in like 1 or 2 YouTube videos. You should really understand the strategy. As we know from the crypto market, 2 plus 2 is not 4, it's rather 5 minus 1. And this means that events don't occur exactly as we imagine. It's rather a general trend that we have to look for. And if you're not able to adapt to this trend, you will not make a lot of money. The next thing that is very important is following investing principles. There are a couple of principles that are very important for investors. And if those principles are really kept into mind, it becomes a lot easier to not fall for any scams or just making bad investment decisions. Well, those investing principles basically say, for example, that you should look for transparency. Transparency is very important, as when looking at a crypto project, and there's a team that is not very transparent and in some cases even has some false information, this is a very big red flag. As you have to think about it, why would a project not want to show their developers or their team, or why would they lie about potential partnerships? Why would they do that? Well, they can only do it to trick investors into making them believe that the company is doing well. Another problem is that they promise things that are way too good to be true. One example, of course, is the USI tech scam, where they were promised in high returns of up to 1% a day, which sounds of course very good, but this is totally unrealistic. And if those high promises are made, this is usually to get investors' attention and to invest a lot of their cryptocurrency money. Also, it's very important to look at the holdings. While there are a lot of cryptocurrencies, and some of the cryptocurrencies, they only have a very centralized network of holders. And this is a very big problem, especially if those holders, let's say the top 10 to 50 holders, they hold over 90% of a cryptocurrency. This first of all means, of course, high volatility, and is usually not a good sign, as those 10 to 15 individuals have complete control over the cryptocurrency, and they can basically dictate the price. This in general is also a sign that this project might be a scam. Also, it's very important to look at the information and to double check the information that is given. Especially with false information, this is a very big problem, as when there's false information, investors are easily tricked. So you should always double check the information and be really sure that this information is accurate and that those utility that is promised by the company is not just made out of thin air and there's actually some real thoughts behind it. Also, what is very important to see is that actual partnerships are made, especially for the smaller cryptocurrencies, and those partnerships are actually real. This is very important, as of course there are many cryptocurrencies that could succeed without having really big partnerships. But this can become more and more of a problem, and it becomes more and more difficult. And especially for the start, adoption is a lot easier to be done when high companies like Google or Amazon support a project. Now, what should you take away from this? Well, before I say, it's very important that this video is not financial advice. None of the things I say or that the things I've said is financial advice. You should always do your own research and follow your own instinct and not mine. I'm not a financial advisor. I'm just doing this video for educational purposes. So, what should you learn from this? Well, regarding investing, a lot of sources say that crypto investing is still very risky. And this is true, but this also means there's a high probability that is possible. And a lot of sources say that you should invest like only 5 to 10% of what you have in your cryptocurrencies. However, I think it depends. For me personally, I believe it depends, as I think it depends on how much you have. If you have already a huge amount of money, I would say cryptocurrencies might not be the right thing to invest in, or at least for only a small part. But if you're on the smaller side and you don't have a lot of money, I think you could go for an even higher percentage. As if you think about it, 5 to 10%. Let's say you have for the 5% $500, and you invest those $500 and you make 20%. Then you would get only $100. Well, of course, it sounds good, $100, but you could have made a lot more. And especially if you don't have a lot of money, it will take forever with the stock market to get the money. As a comparison, Warren Buffett makes about 20 to 30% a year. And he's among the best investors that would ever existed in the stock market. And let's face it, most of us are not Warren Buffett. So I personally think that it might be an idea to think about investing more in cryptocurrencies, especially if you don't have a lot of money and you really want to make substantial gains. I personally can relate to this, as I personally started with a small amount, and even if you make like massive gains, let's say you make 100, 200%, you're not really making a lot of money. And for the crypto market, it's a lot easier to make a lot of money than for the stock market. As for the stock market, it can take really months, sometimes even years, to make 20 to 30%. Well, of the crypto market in the current situation, it's a lot easier to be possible. However, of course, you should also regard that you should not blindly invest in some cryptocurrencies. You should always take calculated risks. Risks that are investments that can be risky, but also they're reasonable, meaning there is some utility behind. The project actually offers something. They actually offer something for investors to invest in, and they really have a vision to professionally drive this company in the future. Now, in conclusion, what have you learned? Well, first, you learned that even an expert like Neuner can fail with cryptocurrencies due to basic investing principles, disregulation. This includes lack of diversification, following greed, or not listening to cryptocurrency feedback, and especially regarding red flags. You also learned that investing principles are very important to be considered. They should always be considered. And it can basically prevent you from falling for cryptocurrency scams or, let's say, worse projects. Some of the investing principles are the need for transparency, accurate information, accurate holders, and following the facts, not the feelings. And you should always ask yourself, at this point of time, could I directly sell it and would somebody immediately buy it with the utility that this cryptocurrency is offering? If this is not the case, then you might already be on the wrong side of the investment and you should be worried. And finally, you learned that you might adapt your cryptocurrency strategies and that 5 to 10% might not be enough, as even if you make a lot of money, let's say with 5 to 10%, with let's say $500 you make 100, this might still not be enough to really build substantial wealth in the long term. However, I can be completely wrong with all of this, but it's just my way of explaining and showing you my investing strategy. So finally, do you agree with me that you should invest more as a small net worth individual in crypto? That you should invest more than 5 or 10%? Or do you think it's already enough or even too high? Let me know. I will see you in the next video.